Vodafone Idea board will meet on 4th September 2020 to consider fundraise option, and this fundraise is very important for them to tide over cash flows issues that they are likely to face from next financial year onwards. In the current financial year, they are largely provided for, and that's largely because they've already paid more than 10% of AGR dues in the current financial year, what the Supreme Court has asked them to pay before 31st March 2021. Also, they've got a moratorium from Department of Telecom on the spectrum payouts for the 2 years, so they don't have to make that also in the current financial year. But having said that, if you look at their financial position as on 30th June 2020, it is very precarious. They only have cash in hand worth rupees 3,450 crore rupees. If you look at their debt, it's huge at over 1 lakh crore rupees, and their net debt to EBITDA, which is a matrix that we use to calculate how much they can, how much EBITDA they need to pay their debts. It's at 18x times, so they need to really pay out their debts and improve their cash flows. Analysts believe to improve their cash flows, they will need a lot of factors together. They need to improve their operational performance. For that, they need to improve the tariffs, and analysts are saying they need as much as 27% increase in ARPUs, which is average revenue per user, and that's a substantial increase, and it's unlikely that can happen pretty soon. It might be a couple of tranches that is required to achieve that kind of improvement in ARPUs. ARPUs can also be improved if there is up trading of subscriber. That's for example, if a 2G subscriber moves to a 4G subscriber, becomes a more high value customer, then also your ARPUs can improve. But for that, the company will need to continue making at least competitive capex as much as their peers are making, and to give as much good quality of services as their peers are giving. So that will also be required. Another factor that they can lean on is reduce the operating cost. They've already achieved some synergies post the merger between Vodafone and Idea, but they need to achieve further OPEX synergies and reduce their cost going forward to improve their profitability. They will also need fund infusion, and not only fund infusion, they will also need to divest their non-core asset, which the company has already said they will be looking at. They will be divesting their optic fiber asset, their data centers, as well as they've already said that they will be divesting 11% stake in Indus Tower, for which they will get some 4,000 crore rupees. But the point here is that the company will need all these factors to come together for them to survive, have a shot at survival going forward, and to meet the huge cash flow outgo going forward. So all these things need to fall in place, and this will require nothing short of a miracle for this to happen and Vodafone Idea to survive.